The famous ICT Silver Bullet Strategy was made by Michael Huddleston. There are many videos out there explaining this strategy, but in this video, I will try to explain it in a quick and simple way. Before we start, I want to tell you about this amazing free Discord that you can join if you want to trade futures with a community. Link in the description. Okay, back to the video now. If you are here, chances are you already know about ICT concepts. But if you don't, not to worry, as you do not need to know that to learn this silver bullet strategy from this video. Without wasting any more time, let's dive right into the video. Thousands of traders have found success using this strategy and have become a consistently profitable trader. They have even passed funded account challenges using this particular strategy. So, why is the strategy so good? I'll give you 6 quick reasons. This strategy involves doing how institutional traders such as banks and hedge funds trade. So, by mimicking how they trade, you can put yourself at an advantage. This is a time-based strategy, meaning that you cannot trade at any time the market is open, unlike most other trading strategies. There are specific 1-hour time periods of the day when this strategy can be traded. So, you don't have to sit in front of the charts all day to find setups. All you have to do is have the charts open in front of you for 1 hour only to find the setup and trade it. Imagine working 1 hour of the day only. Isn't that great? This strategy has straightforward rules. So, there is little to no subjective analysis involved. That means everybody using this strategy will find the exact same setup when it appears. The setup that you will trade shows up every single day as claimed by the ICT himself. There would rarely be any day when the setup doesn't show up. This means that you won't feel you just wasted your hour looking at the chart only to not find any setup. This strategy offers bigger risk to reward ratios. In many trades, you'll end up netting more than 2x or 3x your risk when you win. And the last reason is that no daily direction bias is required for this strategy. No trying to guess if the market will be strong or weak today. So, you don't have to get into analyzing the markets at all. I mentioned it's a time-based strategy. So that means it has specific trading windows during which it can be traded. These are 3 1-hour windows during the day. There's London session window that lasts from 3 a.m. to 4 a.m. Then there's New York AM session that is from 10 a.m. until 11 a.m. And then finally the New York PM session from 2 p.m. to 3 p.m. All of these are Eastern Standard Times. Let's quickly go over the timeframes now. As this is a day trade strategy, and you can only make the trade during the specific trading windows, the timeframes suggested by ICT are the 1 minute, 3 minutes, 5 minutes, and 15 minutes. Generally, the lower the better. Now, let me explain the short setup first. First of all, you would mark the trading window on your chart. So, let's say you want to trade the New York AM session, which would be from 10 a.m. to 11 a.m. You would mark it out on the chart so it's easy for you to know in a glance when it starts and when it ends. Then a few minutes before 10 a.m., you will observe the recent price action. This is important because you need to know the recent buy and sell swing levels, also known as buy-side and sell-side liquidity. These are levels which the price recently reversed from. You would mark out the buy-side liquidity like this, and then the sell-side liquidity like this. These are important levels now for this trading strategy. Now, when the trading window starts, you will sit back and wait for either of these levels to be taken out. If the buy-side liquidity gets taken out first, then you will be looking for a short setup and vice versa for the sell-side liquidity. Now we can see here that there was a buy-side liquidity sweep. What do we do now? We wait for the price to get back down and give us a short setup. The short setup that ICT uses for Silver Bullet is the fair value gap. If you have got to this video looking for Silver Bullet strategy, then chances are you know what a fair value gap is. In case you don't, here's a quick rundown of the fair value gap. If you want a more detailed video explaining the fair value gap, let me know in the comments below. Essentially, a fair value gap setup requires 3 candles. either 3 candles down or 3 candles up. Like this. A fair value gap is created when the body of the second candle does not have any overlapping body or wick from the first and the third candle. As you can see, this part of the body of the second candle has no wick overlapping with it from the first or the third candle. So, this area will be the fair value gap. I can create a detailed video on fair value gaps if it interests you guys. Let's get back to the strategy now. So, once that fair value gap is formed, you now know where you will enter a short. Different traders have different preferences on where exactly they want to enter in a fair value gap. Some prefer the bottom, some prefer the middle, and some prefer the top. Each specific location comes with its advantages and disadvantages. For those who tend to enter on the top will have the highest reward to risk as their stop-loss size will be smaller, but they will also be missing on a lot of trades that do not trigger them in because the price never reaches the top. Conversely, those entering at the bottom will have a lower reward to risk because their stop-loss size will be larger, but they will not be missing out on trades. So, where exactly to enter comes down on your personal preferences. If you want the best of both sides, you can simply enter right at the middle of the fair value gap. The stop-loss will always go a little outside of the fair value gap. Now, keep in mind, one of the rules is that the distance from entry to your final target, which is the other side of the liquidity, should be no less than 15 pips on Forex and 10 handles on indices. Once you have placed entry and stop-loss orders, you will sit back and wait for the price to come to your entry. Like this. You can also set partial profits along the way to your final target, as your final target may not always arrive, but if you have taken partial profits, you will still make something even if your break-even stop-loss is hit. Once the trade has moved a little in your favor, you are supposed to bring your stop-loss to the break-even price to remove all the risk. Now, let's go over the long trade explanation. It will simply be the opposite of what we did in the short trade. We mark out the trading window period that we chose, whether it's 10 to 11 a.m., 2 to 3 p.m., or 3 to 4 a.m. Then before the entry, we will mark out the buy side and sell side liquidity levels. Once the market opens, we will wait for either of the side to get taken out. Since this is a long trade explanation, we will assume our sell side liquidity was taken out. And then we're going to wait for a fair value gap to form. And then we will place our buy orders. The final target will be the other side of the liquidity, but we will have partials along the way. It's simple, isn't it? Alright, important note here to keep in mind. Liquidity sweep can happen prior to trading window as well, and it does not necessarily have to happen after it. Similarly, our exits can be outside of the trading windows too. However, our entry can only be within the trading window, and not before or after it. Before wrapping up this video, let me quickly show a couple of real charts examples. This is the chart of S&P 500 futures. Before the trading window starts, we mark the trading window, and the buy and sell side liquidity. Trading window starts, and we see the buy side liquidity sweep. We wait for a fair value gap. This one might have been a loser for you if you didn't have your stop wide enough. But then you get another one. Here's your entry. And this one is a full target winner. Here's the chart for Nasdaq futures. Marking out the trading window and liquidity levels. Trading window starts and the liquidity level gets a sweep right on the first candle. We wait for a fair value gap. And we make our entry here. And this one goes on to being a full target winner as well. I hope you guys liked this very simple explanation of the ICT Silver Bullet. If you have any questions, feel free to post them in the comments section.